All right. Yes, sir. Good morning, my fellow simpletons and degenerates. Just another day, another dollar, another chance to make more money. It seems like the market is, in fact, doing what we thought it was going to do, which is what? Be volatile. We have GME earnings, and pretty much we're on the eve, right, so to speak, of GME earnings. What is it going to do? What are people expecting? Um, what is the street expecting, and so on and so forth. What are we expecting, right? So um, it doesn't really matter, how stocks are trading. It doesn't matter what Wall Street is doing. We are trying to capitalize um, on the opportunity that the stocks are giving us right now, this minute. Some are up, some are down. This is where we make our money, right? I believe that GME is going to have some good earnings. Um, I believe that they're going to show probably more than 19 cents per share. I think we're going to $25 a share. I think that they're going to show some growth on their Bitcoin acquisition. I think it's going to go to $10 billion cash on hand. And that's including Bitcoin, right? So, hey, that's why we're here. We're trying to basically, see how we get paid. We're not trying to time the market. Yes, I'm sure that a lot of us know how to read a graph, and this is kind of where things get convoluted and people get frustrated because they know their RSI, Bollinger Bands, they know their Fibonacci retracements. They see the 200 DMA, the 50 DMA, and so on and so forth. And then they try to time the market, and then the stock does not do what they wanted to do, and they get frustrated, they get angry, and they said, "This is rigged. This is fixed. I'm done. I lost a lot of money." And they don't take into account the fact that 90% of retail traders that come in looking for a quick dollar actually lose money. People that come in, off of the street, um, trying to make a quick buck. This is not how it works. Time in the market will always outperform trying to time the market. It's just the way that it works. But anyways, what do we have here? Zeta State, BC is in the house saying Uncle Savage, GME, baby. Indeed, GME. Jude K is in the house saying, "Good morning, Savage. Hope all is well on your end, Jude K. Everything is great here, man. We're just coming in for a quick 40 minutes, 45 minutes to touch base and see what the market is doing at this moment, and to try to see what this with this GME earnings is going to try to showcase and see if we get paid. We get paid, right? So as you guys know, I've been telling you guys for a while now. I have some $22 cash secure puts on GME. I got I think a little over $2 for them. So I'm essentially buying GME for under $20 if that happens, right? So GME is 21.95. September 19th, I'm getting some GME shares. If GME happens to be 22.05, then I get my $2,200 back. No big deal. I have some $23 cash secure puts expiring October out, and some $23 cash secure puts expiring January, which I received a nice chunk of change for. And I have some $30 cash secure puts expiring January and October. So those I received, at least I think $6, $5.50 to $6 for the 23s, and I bought them a couple of months ago. And those 30s I received, I want to say like over $10 for. So essentially, I'm trying to get GME under $20, right? My average is in the 13s. So if I was place those shares, no big deal. So I'm just ready, trying to see what the stock is going to give me, what the stock is telling me. And at this moment, it seems like the street is a little happy with GME. And I believe it's a stock that should be easily $40 a share, if not a little more. But it doesn't matter what I think. It's what the street thinks. GME was a little bit over $23 a share this moment. It's kind of taking a little hit now, and it's starting to come down. I think the overall market was kind of upticking for a second, right? But today's high was 23.25. Today's low is 22.56. So we're 50 cents off of the low, which is good. Up a nice 2% at this moment. I like it, and I'm ready. I'm excited, man. Let's see here. Kajuke saying good morning to all in the chat. Hector saying good morning, all. Marcy's in the house saying good morning, y'all. Ricardo Canales is in the house saying Savage. Ricardo, what's going on? SJ is saying hola Savage. Hola SJ. I hope you're doing well. Number 4 is saying Mark C. Bobby Atkins saying boom. Row 10. SoFi covered calls. Until September 26th, $28 strike for 58 cents each. Okay, I think that's interesting. I would have gone, the third Friday of October, probably get over $1 for those. But it's your money, and you know what you're doing. Bobby's been around for a couple of years now, and he has his own way of doing things. And he's totally okay selling SoFi at $28. I'm sure he didn't buy it at 28. He probably bought it closer to $8, and so he's gonna make a nice chunk of change, and he's getting paid to sell his stock, which is not bad at all. Jay Gill saying good morning, Savage and all. Charlie C2 is saying good morning, Savage. Good morning to all. Kent's mom is in the house. Number 1 fan is in the house. I like it. Kent's mom, good morning. I hope you're doing well. Mike Guzal, good morning, all. Mark C saying row 5, cover calls on open for 121. I don't know what strike. I don't know what date expiry. I don't know. But I'm as long as you make money, dude. I think that's cool. Charlie saying I got $22 September 19th SoFi puts that are ready to roll. Stink bids are into buyback. Sold for 120 in early August. Stinkers are set to buy back at 12 cents. You're making over $1 per share. I like that. That is awesome, and that's how we do it, man. You could even dare the market to take you out, because September 19th is next week, right? So unless you really need the money and you want to sit on more money, I don't see SoFi coming down below 22 in a week and a half. Yeah, put a cent in there. Put a stinker of 1 cent. I think that's cool. Kilua Dre is in the house saying good morning, Unk. CKT saying time to make money. Put a stinker in on Serve 10 cash cure puts. Good to closing for October. Trying to get 150. We will see if it fills. Serve is actually an interesting one because I got some cash cure puts on it. I got some $10 cash cure puts. I believe expire in October, and I got over I think over $1 for those. I don't think you're gonna get those 150s. Because Wedbush just upgraded them to $15 a share. So, whether I like Wedbush or not, right? I think that they're full of it, especially Dan Knives when he gave SoFi a $3 price target. I thought he was full of shit. And even now the guy is sour. And I think he's got SoFi at like $12 or something like that, which is insane because they keep crushing all metrics. They keep, year to year, they just keep going up. They went from being $1.8 billion, a cap stock to easily over 10 billion. And they have so much cash on hand. They have products that are just launching every other week, it seems. They have a great CEO. So they're led by some really, really good heavy hitters. SoFi should be $35, $40 a share, but it is where it is right now because I get it. It's gone kind of fast. I think because the street figured out SoFi is the real deal. It is a bank. It is not like a tech company. It happens to use tech in order to do banking, but it is not a tech company. Kind of. It's kind of a hybrid, right? And that's what we want. It's a disruptor. And it's going to make a ridiculous amount of money, but until, everything is kind of set, right? And the market kind of finds an even footing. I think it's just too volatile at this moment. SoFi is where SoFi is supposed to be. Um, should it be $30 a share? Probably not right now. Talk to me at the end of the year, but I think some $30 SoFi cash secure puts expiring 2027 would be pretty great for somebody that's trying to put their money in the bank. Um, because I believe, this is my personal opinion, maybe on a red day, go in and some January 2027 SoFi $30 strikes. Um, try to get $10 for those. So basically 33% for basically putting your money in limbo, um, and setting it aside. Worst case scenario, you're getting SoFi at $20 a share, because that's what, if you get $10 for your troubles of buying SoFi at 30, that is not a terrible deal at all, my friends. Let me tell you. So maybe on a red day, put a $10 stink bid out there to get SoFi at $30 in 2027 January, and see what happens. I think SoFi is going to $30 a share, probably early next year. But it's gotta things have to happen, right? It'll be fluctuating between then and now. I think next quarter earnings, they're going to show some more growth. They were like around 25, $26 on this quarter earnings, right? They flew to like 28, and then they got hit back down. I think for the next quarter earnings, it's going to be around 26, $27. They're going to kill the metrics again, and it'll go probably like, it'll touch 30, right? That's going to be your cue to sell some 35s for like March 2026, and bring in a lot of chunk of a lot of money. Use volatility as your weapon, and then you can then buy them back when SoFi goes back down to like $27, $28. Then, right? So, is this guaranteed to happen? Absolutely not, right? We don't know. This is all speculation. The market is speculation. Whoever tells you otherwise is full of shit. So, at this moment, what do we know? We know SoFi is, in fact, 25.60. That's what we know. That's what the market is telling us. That's what we know. That's what we capitalize in. And if you were to sell some covered calls on SoFi, I would not do it today. I would wait for the stock to run 5 to 10% on a green day, and then sell some, 28s to October. And if I was to do some cash secure puts, I would wait for the stock to go down 5 to 10%. Maybe if it hit $23 a share, 23 something, then I would sell some cash secure puts, maybe some 25s out to January, some 30s out to January, some 30s out to 2027, bring in $10. That's how you do these. All right, what do we got? Let's see here. So Serve's interesting because they just got upgraded, and so like the $15 target, it's kind of cool. I'm just gonna wait to see what happens with those cash secure puts in the meantime. I may do some 15s expiring 2027. We'll see on a red day. Mr. Lucky Go Round is in the house saying savage. He sold 30 open $8 strikes for un buen de dinero. I told you, bro, if you're gonna sell some opens, and you were willing to sell it then like at 650, I think you said, why not sell at 7, right? Sell it at 8, out a couple of months and bring in some nice cash. I'm sure you got over $1 for those, so that's beautiful. I think you were trying to do 30 of them. Yeah, 30, that's right. So you brought in, I think, at least $3,000. That's beautiful to me, man. You just brought in $3,000 in one day, right? Like within an hour, 2 hours of the market opening. What is wrong with that, guys? There's absolutely nothing wrong with that at all. And that's how you make money, trading options. Everybody's out there always buying them. And that's kind of how you lose money, especially short term, right? Leaps, it's a different beast, but I would advise buying leaps when there's a lot of green. If leaps are the type of options that I don't condone buying them, right? I'd rather you buy the stock through cash secure puts. But if you were to buy some leaps, I use the same MO as I do with cash secure puts. If a stock gets hit 10, 15, 20% on a day and it goes down, 10, 15, 20% on a day, and nothing changes with the metrics and the fundamentals. The CEO is not embroiled in some scandal. There is no insider trading, none of that stuff. That's when you look at leaps. You know, Lyft or Webull would have been um, a great candidate for leaps when they got hit like 10-15% on a day. I told you guys about Lyft when it was $15 a share. I think like a month ago or so, and I was telling people if you're gonna go into Uber, because someone mentioned Uber on the channel, and I said, I'm in Lyft. I went in through cash secure puts. I did $15 cash secure puts out to like October. I brought in some money, and now Lyft is it's higher. So I'm just gonna cross my arms, see what happens, and then I may close those and go to like 16s. But we'll see what the stock tells me, right? But then calls would have been cool. I bought some so I think some $17 calls, January 2027 calls. Right now they're nicely up. I'm gonna wait because I have till 2027. I think I'm gonna wait to see because there's more room to the upside, right? And I also Webull is another one. I bought some calls on Weebulls. I bought some 15s expiring 2027 when Weebull hit like 12 something last week. And I did some let's see who else got hit. I bought some $25 calls when AI went down to like 14-15 bucks, right? I think I told you guys about that. Um and so those are nicely up now. So January 2020 are those 2027 are those strikes. Those are actually leaps. And you got to look at the risk reward ratio, right? Like you're like, okay, I could buy 100 shares through cash secure puts, right? Um, you do 3 or 4 cash secure puts, you bring in 15%, 20% off of the strike, uh, off of the return on your investment. So if you buy a $15 strike and you sold the cash secure put, you brought in 15-20% right off the bat, meaning I made 250 or $3 on those $15 cash secure puts. you know 4 of those will bring me close to $12, right? So then you can use those $12 and say the stock is low enough to where I could use this premium, right, to buy some calls. And then you go and you say, the stock is at 12 bucks. I'm going to buy some $15 or 13, 14 bucks, and I'm going to buy some $15 calls out to 2027. So you're kind of hedging, right? And it's not your own money that you're using. You're using cash secure put premium, which means what? Which means that today, on this day, the day that you did that cash secure put, that you wrote that cash secure put, you were okay buying that stock then because it already got hit 15-20%, right? Not a bad time to get in. But you were smarter. You said, you know what? In case there's a little more room to the downside, I'm protecting myself and I'm doing some cash secure puts, a strike below where it's at now, and I'm going out a couple of months to bring in some money. I'm getting paid to buy this stock, and I'm using that premium to now do some calls. Right? That's the only way that I can see um, people actually buying calls, and I would justify it. I don't condone that in my channel whatsoever. But if you were to do them, you know, using that strategy um, would kind of be a way to justify it in a way, right? All right, so here we go. Mark C saying 1017. Okay, 1017 is a strike. I got you. CKT, I did see the upgrade. I want to keep an eye on it for the next few weeks. I'll see if I need to adjust to the 125 range and wait for a dip. All right, hold on, guys. Hold on. 1 second. I'll be right back, man. All right, all right, all right, all right, all right, all right. We're back, my friends. My bad. One of the kids has to go to the doctors in a little bit. Another one is home. Well, he's the one that's home for the day, and the other one doesn't get in until like an hour and a half for now. So they both are trying to watch TV. The problem is there's only one TV available, so these kids are pretty much tearing each other to shreds. Daddy just went in there and said, if you guys can't get along, I'm gonna break the TV. So I know it's terrible, but they gotta learn to get along. They're 4 and 6, so if they were like 15 and 18, I think that'll be worse. But all right, so CPS GME cash put spreads. GME expires October 3, 154 times 5, $770. Had a bill to pay. Thank you, market. Cash put. Did you do a cash secure put? I think Z Estate did cash secure puts. I don't know the strike. Oh, $23 strike. Okay. That's not terrible. I mean, October the 3rd. Again, I like the third Friday of the month just because it's easier to come in and out. That's kind of more dancers on the floor, so to speak. There's more volume, there's more open interest in the third Friday of the month. But I mean, if you guys, I mean, Z Estate's been around for a while, so Z Estate knows what's going on. So I don't worry about Z Estate. Tom Kaufman is in the house saying hello, Savage. Bobby Atkinson is saying I wrote $30 cash secure puts for SoFi, $27. Oh, 22 $30 cash secure puts. That's the strike for SoFi, expiring 2027, sitting and collecting interest. That's how you do it. That's exactly how you do it. You go through that Charles Schwab, kind of account that they have. It's a specific fund, and I think it's SVWXX or SUWXS. No, SVWXS or XWVXS, something like that. But anyways, they give you 4 or 5% interest every year when you having your money there. And if you do cash secure puts, they basically put the money on escrow, but it's still like in there collecting interest, and that's how you make a lot of money like that. Because if you bring in say 33-40% through a cash secure put in a year, and then you collect 4%, it kind of stacks, right? So I think that's a beautiful way to make money and kind of keep your money in the bank. Juan Velasquez is saying, good morning, Savage, and happy Monday, everyone. Indeed, happy Monday, my friends. Good morning, Savage, and happy Monday, says Juan Velasquez. Marcy, SoFi should report at the end of October. Yeah, exactly. That's why I'm doing the October strikes. Dude is saying, Savage, let's go. Karen D saying, hi, Savage. Dude is saying, thank you for the trade idea. I wrote the 140 NVIDIA puts, took 930. Might add more if we get a further pullback. Yeah, you're welcome, dude. You're basically buying NVIDIA at 130, 130.70. That's not, I mean, NVIDIA should be around 125 to 130. I think that's a good strike. I mean, you're literally getting paid to buy like the most traded stock in the world right now. So I see nothing wrong with that at all, man. I would have waited for a 5% pullback day, but it's really hard for NVIDIA to go down 5%. We don't know what Jerome Powell is going to do, right? We don't know what the Fed's going to do. If they don't raise, if they decide to not cut rates, I think it's going to be a big deal. I see a spider. Hold on, guys. Ooh. I'm sorry, my friends. I'm back. I'm sitting on this heating pad for my lower back, and it's kind of cushiony, so it kind of feels really weirdly. And I just saw a spider. I don't know how the spider got in. I do know that they're trimming trees around the area, so probably one of those spiders from some tree that decided to kind of run for dear life. Anyhow, let's see here. Dude, you're welcome. It's all good. Nvidia, good call in the 130s. Premium of the option is saying I have a few friends that buy calls, but it is running on a poor man cover called on the SPY. Yeah, see, poor man cover calls I stay away from. It's just not worth it. Too much babysitting. Same thing with butterflies and so I just it's just too much babysitting, man. I already have 3 kids. They require a lot of time and energy, and the last thing I know, the last thing I need is kind of to pay more attention and look at the market closely, because especially as volatile as it is right now, I have to be ready to go in and out, right, of the different strikes, and either on this leg or that leg, and it's just you got to worry about 4 legs basically, and so at this point, the dumber the better, right? I KISS method, right? Keep it simple, stupid. So that's exactly why I like doing cash secure puts, because I can cross my arms. I really can cross my arms and just wait for my money to make money. Cover calls, same thing, right? I sell them on green days, and I cross my arms, and I wait for that money to sit and get and hit my account and make thousands of dollars, or I get my stock back, and then I write more covered calls out to a couple of months and bring in more cash. That's how we do it, guys. D Visual are saying, my guy, what's good? Nothing much, man. We're just trying to trade here, trying to make money, right? Trying to get ready for these GME earnings, man. I'm very excited for GME, and I'm trying to see it go with $10 billion cash on hand, and I want these clowns, right? I want Kenny to get his ass handed to him, and I want him to I want GME to run to 30-35, and I want them to cover and make that stock rise even more, so that I can deploy some covered calls, out to like March next year or January. And I love to bring in $6, $7, $8 a contract on out the money covered calls, and GME lets me do that. So at this point, I'm just acquiring as many shares as possible. That's why I'm doing the $23 and $22 cash secure puts, because I'm daring them to, basically give me GME under $20 a share. I've been sitting on the sidelines for too long, just kind of waiting for it to like pop and then sell. It happens, but it takes 4 or 5 months sometimes, right? Because it sits idle. But like in the meantime, I don't do anything. And if you guys know anything about me, you guys know that I like to think of my portfolio as a building, right? And if I'm the building manager, that means who's the tenants? The tenants are the companies that I hold, right? The stocks, and they have to pay rent. And sometimes, GME goes months without paying rent, and I can't have that. No stock is special, right? No stock is special. I got to be willing to part ways with stock that is not performing, which is why I sold Lucid. And even though I was doing covered calls and kind of making up money as we went, it was just not moving, right? It was over a year that it was just just coming right down and not meeting expectations. And although I do have faith in the company that I think they're going to still make money. When they announced that they were going to do a reverse split, that was my cue, because it did go down to like they went and reverse split 10-1 when it was like over $2. So 10 shares were over $20 a share, and then it went down to 15. So this was over a week ago that I sold these shares, closer to 2 weeks. And so I'm waiting another 2 weeks, 2.5 weeks, 3 weeks to see what the market is telling me. And because I use those as tax loss harvesting, so to speak, right? I'm going to use them to my advantage. I took a loss on selling those shares, but I'm going to use that loss to kind of mitigate some of the gains, some of those capital gains this year, which were quite a bit. So at this point, that's the purpose that Lucid served. It's okay. Sometimes we got to pivot and say, you know what, this is not working. It may still work in the long run, but right now it's not paying rent. As a manager, I have to make a decision and say, I have to kick you out. I got to evict you, and we'll see if you're cool enough to bring you back in. But at this point, let someone else take that spot and make me some money. And it just so happens that um, Webull was just very attractive, and C3.ai went to like $14 a share, $15 a share. So I took that money and I went in there. I did some cash secure puts on AI and Webull, and so I got premium that in that way, and now I'm just waiting for the stock market to do what the stock market does, and for time to shrink those contracts so that I can in turn then buy those contracts back for like 70-80% less than what I got for them, and then I'll roll if it's needed, and then I'll sell some more cash secure puts out a couple of months. Then until then, now I'm just crossing my arms, my friends. I'm crossing my arms, and I'm waiting to see what the stock tells me. Let's see. Juan Velasquez is saying, "What do you think about me selling $35 GME calls to January 2027 and getting 447?" I mean, it's right before. I mean, so you're taking advantage of the volatility, which is great. The higher the volatility, the better, and it's closer to earnings when the volatility is the highest. I think. I mean, honestly, I don't think that's bad, dude. I don't think that's bad because you're basically saying this. You're basically telling the market, I don't give a shit what GME does. I know it's at least $35 a share. But you're going to 2027, so I mean, if it was 2026, I like it better. I mean, you're essentially selling for $40 a share. It's 22, 23, so that's $17 move. If you need cash, I mean, yeah, I just don't see anything. I would personally stay closer. Some 30s. Some 30s expiring January would be good. And then if it so happens that GME is closer to 30 in January, then you can roll for 35s because you were willing to sell at 35 in 2027 anyways, right? So then you can roll to 25s, or sorry, 35s in January and bring in premium. So you'll be bringing in premium then. And you're going to go to the same $35 strike. You go to 40. GME will let you go to 40 because the strikes are so close apart, and the premium is kind of it's so close as well. So you be able to go to 40. So instead of 35s, you sell 40s. So that's a 500 per contract dollar move. I mean, honestly, dude, it's not terrible. I don't see. Personally, I wouldn't do it, but like I don't see anything wrong with that. You're basically way out of the money. You're $12 out of the money. You're getting $447 per contract. You do 10 of those, that's almost $5,000. And if you want to use that to pay down your debt or to pay for your mortgage a couple of months, nothing fucking wrong with that at all. That's the beauty of this. I don't see anything wrong with that at all, Juan. I wouldn't do it just because earnings, and I think they're gonna crush it, and then FOMO is going to kick in, and you'll be able to sell maybe $40 27 covered calls for like $6-7. But I'm hedging. I mean, I don't know what's going to happen, right? This is speculation. Right now, you're doing what you're supposed to do, which is the stock is telling you this. The stock is telling you what to do, and you're listening. And I mean, they will sell up to you. I don't see anything wrong with that, my friend. You're selling way out of the money. You're selling a year and change out, and you're bringing in money. I mean, There's nothing wrong with that, dude. I really don't see anything wrong with that at all. I say bravo. I mean, sure. I like it. I like it. I really like it. You're doing what you're supposed to be doing. You know, absolutely. I think it's cool. And if it happens that we have great earnings and it goes to like $30 a share, um, tomorrow or the next day or this week, you're at 35. What do you care? So dude, I think it's cool. Zeta State, Big Bear, 15 contracts. Leap contracts brought for 210 with a $7 strike. I'm writing for Big Bear to hit $7 and then write Poorman cover calls. Well, I actually did cash secure puts on Big Bear. I did $7 strikes and brought in over I think like 365 and 375. So it's over 50% on Big Bear AI. And then I've done nothing. I'm waiting to see what it's telling me and seeing if they're gonna have some contracts with some people. So are the contracts low enough to where they justify you buying them? $7 strikes. They're 210. I mean, you're basically paying. Your break even would be 910. And then I stay away from poor man cover calls. That so I think if it works for you and the math works for you, I think that's cool. You know, I just I would stay away from calls just right now because I think that the volatility is a little higher and I think it could come down. Let's see what the stock market is telling us right now, guys. I want to see if I can share um, this screen with you guys. Let me see if I can share my screen with you guys right quick. No, I can't. Damn it. I don't know why I can't. Oh, there it is. Wait. Did I share my screen for a second? Dude, I just shared my screen with you guys, right? I could have sworn I saw it for a minute. That's so weird. All right, I stopped sharing. Let's see here. Now, what the heck is going on? That's so weird, guys. I don't know why I was. There's something going on with this with my laptop, and I'm trying to figure out why it's not letting me share, guys. I should be able to share um, my screen with you guys and let you guys see, where what we're doing with the Dow. The Dow's like it's unchanged. It's up like 26 points. S&P 500 same. The Nasdaq's up 67 basis points. The Russell, uh, pretty much unchanged. The VIX is down almost a point, and gold up almost a point, like 70 basis points. But I wanted you guys to see how um, the Americans' confidence in the job market hits new low, according to the New York Fed survey, right? And that's kind of what I wanted to touch base on, um, and how these tariffs are actually how they're affecting a lot of the companies, the smaller companies, and how I think that using this um, as to your advantage uh, can yield you a lot more money when it comes to cash secure puts, man. I just um, I just think that right now, um, the best way to make money and the best way to actually justify buying stock, I think, is through cash secure puts, because I see a little bit room to the downside, right? And if the Fed decides to not cut in September, which is unlikely based on everything, right? We know that Jerome Powell has bended the knee, but if they so decide um, to not cut rates, um, we're looking at we're looking at a nice dump in the market, right? I think a correction of like maybe 10%. And I think that it would not be unwise to try to like hedge and try to safeguard yourself from from a potential downturn in the markets, right? Um, so what is it that we can in fact see, and where is the opportunity right now? Um, Based on everything we're holding and on the SoFi is interesting. SoFi, if it goes down, I can see it go down 5% a day or two. So I think some cash secure puts on SoFi, some 25, some $30 cash secure puts out to 2027, and bringing in $10. I don't see anything wrong with that, guys. Bring in $10 for those cash secure puts and basically buy SoFi at like $20 a share. I don't think SoFi is going to be $20 in 2027, probably closer to 40, um, maybe even 50. But that's where the opportunity is. C3.ai. I like the stock, man. I like the stock. I like the way it's ran. $15 cash secure puts out to 2026. Not a terrible deal at all. Not a terrible deal. Unity Software. I was pounding the table, like begging people to buy Unity at $15 a share, $14 a share when it got hit. I even said it. Anything under 20 is a gift. I loaded and I loaded and I loaded, and look, Unity is now $44.74. I sold some $40 strikes and some $35 cover calls, which I got, $12 for and in $9.97 for. I'm underwater. Totally okay with that. Because my shares, my average is like in the teens. So that's how you play this game. That's why when I see C3.ai at $15, I just see another opportunity to bring in more shares. I was kicking myself because I didn't get more shares in the past when C3.ai was $10, $11 a share and it ran to 40. I was like, I should have bought more. I bought, like over 1,000, but I was like, God, I should have bought more. I should have more than 2,000 shares, right? Well, now I do. And I'm sitting on some 1750 cash secure puts that are about to expire in October. I'm sitting on some $15 cash secure puts that are going to expire in October. And I'm sitting on some 25s expiring in October in June, in January. I got placed some 25s that I got like $6-7 for through premium. So totally okay with that. It's the same thing that happened with Unity. It got hit. People were saying, Unity actually shit the bed pretty bad. And it took a year to recover, a year and a half. And now look at it. C3.ai is going to be the same thing. I don't know when C3.ai is going to go to $30, $40 a share again. I don't know. I would be lying if I told you. But the metrics are still the same. The fundamentals are the same. And Siebel is going nowhere. He's she's staying as the chairman, and he got a CEO that knows AI and has actually founded companies and sold them to Salesforce. So, I see C3.ai and Salesforce working together in the future. To what extent, I don't know, right? But the sheer fact that Siebel has a cousin that is married, a first cousin that is married to Gavin Newsom, who's the governor of California, tells me that if Gavin Newsom happens to become president of these United States, C3.ai will take over for Palantir. And then Palantir is going to take a big, giant hit in price, and C3.ai is going to go up in price. Now, is this speculation? Absolutely. But everything in the market is speculation, my friends. So what is it that we're trying to do? We're trying to do the best we can with the information that we have up to this point, right? So that's where we are. Anyhow, Recursion Pharmaceuticals, RXRX. It got up to like 478, 479 this morning, and it's back down to 463. $5 strikes, cash secure puts, January. Not terrible. Not terrible, guys. You're basically getting paid to buy Unity for $5, and you're bringing in $1.25. So you're essentially buying it at $3.75. That's near the 52-week low, if not at the 52-week low. Nothing wrong with that at all. See, RXRX will make a lot of money. Okay, they have really good contracts with really good clients, and they're not going anywhere. Now, the key is that their money is in the royalties they're going to receive from all these pharmaceuticals they have contracts with, and they're one news cycle away from going to $10 a share. When will that happen? I don't know. But the stock is 462 right now. Okay, that's where the opportunity is. Now, whether you want to take it or not, whether you want to take a dip in this pool, so to speak, and take advantage of it, that's all up to you, my friends. I can only just say this is the information that we have now, and it's up to you to make the best of it or not. It's up to you. Rivian is $14 a share. It was just $12 a share not too long ago. I was telling people to do the $12 cash secure puts, I think like a month ago, out to October, bring in some money. It's $14.10 now. Rivian will be $100 a share. It's a direct competitor to the F-150, the Ford F-150, right? And that's the market that they're attacking. They're not going for the sedans. They're not going against Tesla. They're an EV company, yes, but they're not going after that market. After the sedans, right? They're going after the F-150 market, and that's a huge market. It's a beautiful car. It runs almost 450 miles per one charge, and the shares are sitting right now at $14 a share. Okay, would you rather buy Tesla at like $300 something a share, or like a fraction of that is where Rivian is, and you want to decide to take a plunge here? Doing it through cash secure puts would probably be awesome, so that you're essentially getting paid to buy the stock. November cash secure puts, $13 cash secure puts bring you in almost $1 right now. You're essentially buying it at $12. There's absolutely nothing wrong with that at all. I would go in on a red day, and right now it's down almost to 1%. If it gets down to like 3-4%, this is the one stock that I wouldn't wait for it to like go to 5% down, because we don't know if it'll get there, right? But doing some $13 cash secure puts and bringing in over $1 for them, I think that's a great start to start position on Rivian. GME is looking that it's recovering. It's 23.20 now, and will we hit $24 before the end of day? I'm waiting to see, because I may actually sell a couple of shares, not shares. Sorry, I may actually sell a couple of covered calls and some $25 strikes, maybe expire in October. I still hold on to like most of my shares and see what earnings does. But until in the meantime, I want to get some money. The stocks have to pay rent, and I want to get some monthly income from holding GME. Um, Archer Aviation is down 1%. I think it come down a little more. If it comes down to like $8, $7.90, $7.80, I think some cash secure puts, some $7 cash secure puts out to January would be great. November would be great. Get paid to buy the stock at $7. Why not? Right? Super Micro is down to $40. Those $40 cash secure puts are not terrible, man. Going out to December 19, $40 cash secure puts bringing you in almost $5. You go out to January, they're bringing you 520, 525. You're buying it 34 and 75 cents. 34.80 for the shares. I think that's a great right, guys. That is a great right, actually. It's a great company. Nobody else is doing what they're doing, and I think that they can't build those centers enough, man. Quick enough. Sentinel One is down almost 3% today. Sentinel One, why go into CrowdStrike and spend a couple of $100 a share when for like 1/10 or less than like 8% of that you can buy, Sentinel One. It's sitting here at 18.30 a share. They keep crushing on metrics during quarters. Why not? It's a great company. It's very well ran. It's cheap. So December 19th, $18 cash secure puts can bring you in $150 right now. You could get $1.50 a share if you were to buy. If you were to guarantee you're going to buy Sentinel One for $18 December 19th. Buy 100 of them December 19th for $18, you get $150 for your troubles right now. Not a bad deal at all, my friends. Not a bad deal at all. TerraWolf is up 2.5% today. If it gets up to like 5, 6, 7%, you can write some $10, $11 covered calls out to like October and bring in some money. Why not? Riot Platforms is barely up this morning. It was down like 3% earlier on. I love it. I love Riot because it's so volatile. It just trades between the $11, $10 channel to like $10 to like $14. So it's just, I love it. It's an easy money maker, and it's a great stock to ride, and because of the volatility. Open Door Technologies for all those that wrote those $7 and $8 covered calls and brought in some money. Look at that. It's tanking, and it's probably gonna go down to like closer to $5 a share. And if we're gonna hit $5 a share and it cannot hold 5, it's going to 4. Either way, you guys, I salute you if you sold them $7 and $8 covered calls. So if it happens that it goes down 10, 15% on a day, don't be afraid to go into cash secure puts and sell some $4 ones. Try to sell some $4 cash secure puts on Open Door Technologies. Go out to October and try to bring in $1. Put some stinkers at $1. Basically buying it at $3 a share. Okay. Open Door is going to $8 a share. I don't know when that's going to happen, but it cracked 7. We know that. It cracked 7 today. I called it on this channel. You guys can just watch the videos in the past. I said Open Door is 60 cents right now. This stock is going to go to $4 or $5 a share when the real estate market is coming back and then they cut rates It's a real estate play. And if it goes through 4 and 5 and holds 4 and 5, we're going to 8. And if it holds 8, it's going to 10. And the shorts are going to get squeezed. And it's a beautiful thing to see it, but you don't have to believe me. You can just watch the videos. Big Bear AI, those $5 and $7 cash secure puts out to like 2027 are very juicy. Big Bear is probably going to be closer to like $10 a share in the next year. Take advantage of the volatility. Take advantage of it that is getting hit right now. I think it's getting shorted, and it's just one of those where you just have to say, is this the AI play that I want to get into? It's fairly cheap at this point, and if you're going through a cash secure put, you're basically hedging your bets and saying, I would buy it, except I'm buying it at like $5 a share a couple of years from now, or a year and change from now, and I'm bringing in over $2 a share. What is wrong with that? You're essentially buying it for like $3, right? If you could buy it under $3, that's even better. $7 cash secure puts. Bring in $365, $375 per share. So you're buying it like, at like $325, $335 a share. What is wrong with that? The stock is at $5 right now. Let's see here. Smart Rent is at 145. It was just 139 the other week, and it was 150 before that. If you missed the train with Open Door Technologies, Smart Rent is there at 145 a share right now. You got an extra $1,450. Just buy the damn stock. Buy 1,000 shares of it and sit on them. Watch the rate cuts happen, which they will happen. We don't know. We're not guaranteed that they're going to happen in September. It's likely. We don't know. It's all speculation, right? But we do know for a fact that Smart Rent is 145 a share right now. If it went to $5 a share, you tripled your money. Okay. You could then sell 500 shares, recoup your money, and then let the other 500 ride and see what happens. Worst things have happened, my friend. Let's see here. Webull is up almost 5% this morning. Look at that. Those $15 puts are looking beautiful. My $12.50 puts are very nicely shrunk. I'm up 26% on those. I love it. My $15 puts that were written a couple of weeks back, expiring January, are looking wonderful. I mean, that's how you do, guys. The trading desk was down almost 3%. I'm looking for it to come down to like 45, right? And then we'll see. NVTS is down, not even a percentage point right now. So we'll see how that's behaving in the next few days. UiPath, I told you guys about already. UiPath, $11 cash secure puts expiring in October on UiPath. Not the most terrible thing. Great company. Strong quarterly 2 earnings. They raised guidance. I mean, it's not as sexy as some other ones, but it's a very good, solid stock. Figma's down to 53. I wanted to go down to like 45. SMR barely up this morning. QBTS, D-Wave Quantum. I like the stock. It's barely up today. SMCI is down. ASTS got hit hard this morning. It got down to $35 a share, and right now it's back to 39. I think if anybody wrote some $40 strikes, so $40 cash secure puts expiring 2027, you made a killing. Some $40 strikes brought you in like let's see, somebody got 1430. So somebody got 1430. So basically somebody said, I'll buy this at $40, pay me $14 for it. So essentially you're buying a 26 and change. What a deal, my friends. Actually, they're buying at $25.70. So that we haven't seen that like in 6 months. That's beautiful. That's a beautiful right. Um, we talked about Nvidia. GME is 23.34. It's going up, guys. If you guys wrote those $22, $23 cash secure puts, you're grinning from year to year right now. I think we're going to have some really good earnings. IonQ is down 2%. Look for IonQ to go down 5%. If IonQ goes down 5%, IonQ I really like. November $35 cash secure puts could bring you in over $3. You put a stinker out there of $3.50, $3. Basically, getting paid to buy IonQ under $35, not a terrible deal. The stock will have to come down almost $5. I like it. I like it a lot. You could actually go to January, and you could write $35 cash secure puts and put a 450 stinker there, and pray you get filled. So you're essentially basically buying a 30.50. Not a terrible deal, my friends. Let's see, what else do we got here? DNA is taking a nice little hit, 2% today. I wanted to go down more. Bullish is down almost 5%. And so I'm really trying to get $45 cash secure puts for $8. And I got my trap set. I got my stinker at $8. If somebody gives me $8 to buy bullish BLSH, $45 strikes in December for $8, I would be grateful. I will hug that person. I like bullish, definitely under $40 a share. Let's see here. Red Cat is up a bit. NTLA is down. It's up a bit. No, red. Yeah. Allogene Therapeutics is down. Talkspace is up a bit. Arcturus is down a bit. Free News Medical is green. FFAA is down 6% today. All right. NVTS is down. If it gets down to 5%, that would be cute. That would be awesome. Serve Robotics was up and now it's coming back down. And I like that. I think if somebody was to do some $10 cash secure puts and try to ask over $1 for those, some $10 and try to get 110, 115, not the most terrible deal. Not the most terrible deal. Let's see here. SoundHound is up 4%. It was just up almost 5%. So SoundHound, my friends, you want to make some money? Sell some calls today, right now on SoundHound. $17 covered calls, giving you $1 right this second. $1, bring in $100. Get paid to hold the stock. Have it pay some rent. You have 10 of those, bring in $1,000. Easy peasy, lemon squeezy, my friends. It's not personal. You're just taking advantage of what it's giving you. Is up almost 5% this moment. $17 cash secure puts on SoundHound. $1. $100. Make it make sense. Make it pay you rent. Domo is up to $15 a share today. Up almost 3%. Almost at covered call land. Galaxy Digital is up. Webull is nicely up. Relay Therapeutics is down. Clean Spark is up a bit. And the VIX is starting to spike. The SPY is starting to go down. And AAOI, this is another one, another cutie, is starting to come down. It is now $23.44, $22 cash secure puts. Expire in October on AAOI. $2 strikes. Put $2 out there. Try to get paid $200 to buy AAOI at $22 a share. This is what I would do. I actually have this. I got paid over $290, but the stock was a lot lower. And I don't mind going in when it's bloody. I don't think it's going to go down 15%, 20% in the next month or two, but it's definitely going to go down a little more. If it does, get paid $2 to buy it at $22 on in October 17th. Get paid $200. Do 5 of those. Guess what? You're getting back $1,000. There's nothing wrong with that at all because this is such a volatile stock that if you were to get assigned, you can sell 10 covered calls, same strike, $22 or $23, um, and you would get paid handsomely. You could bring in for some calls easily every month over $1. That's a beautiful rate. Anyways, guys, I gotta hit the road very soon, so I'm gonna get going. Thank you so much for watching. I really appreciate you guys. I will be seeing you guys tomorrow, same bat channel, same bat time. Thank you for watching. I can't read all the names right now. My laptop's crappy now, but I really appreciate you guys very much. And I will be seeing you guys tomorrow. Until then, I am the Savage off Wall Street. Thank you for watching. We will be seeing each other tomorrow. Now, if I can just go to my live stream, let's see here. Somebody sold some NVTS is saying here. Let's see here. Mr. Premium saying I have a few friends that buy calls. Yeah, no, the calls are cool. Savage, what do you think about me selling $35 GMEs? Oh, we talked about that. Juan Velasquez, 35 would be perfect. Yes, it would. Lucky 18. Mr. Tree Woodcraft in the house. Willie Idaho saying, Juan, that looks like a good trade to me. 39.50. Not bad. Well, lunch is over. Time for the 2.5-hour wait to leave work, make more money. Anyways, you can, everybody. Bobby, take it easy. Andres Alatorre saying to make it happen. Let us say saying purchase Big Bear leaps, and now we wait for the 7 strike for $2. The 90-10 grows into it, and then we write checks. That's how it happens, my friend. And that's how it happens. Let's see here. I sold some Big Bear, like I said, some $7 cash secured puts expiring 2027. And I think I sold some 5s as well. Yep, I did. And I think that is not a bad right, man. And you said you bought, let's see, the $7 strike in 2027 for $2. I actually sold some $7 calls. So yeah, I got paid. I just, my average on BBAI is like $4. So I brought in like I think 250 or 350 per call, and I just thought it was free money, man. It was cash grab. I was trying to raise money for something else. So, but yeah, no, Big Bear is going to like $10 a share. I don't worry about that. It's just it's gonna take some time. We don't know when that's gonna happen, right? Juan Velasquez, January 26th, the $30 paying 173. I feel like you are saying, Savage, bringing in 5K and spend it in Spain in 2 weeks. But then again, you're right. GME kicks ass tomorrow. There's another beast. We have it with us $45. Dude, you know what? You're going to Spain, Juan. I think that if you let the gamblers pay for Spain, that is beautiful. I wouldn't even think twice. I forgot you're going to Spain. Spend that money in Spain, my friend. Be careful though. There's a lot of crap going on in Spain right now. I think that they bit off more than they can chew when it comes to bringing in a lot of refugees. And the thing is that they passed legislation saying that they were going to basically focus on underage kids. and infants and women and old women, right? And what ended up happening was that hundreds of thousands of 25, 30-year olds came in saying that they're 16, 15 years old, and they're not. And they just came in without any type of document, just saying that they were. But the guys have full-on beards, right? And they have weathered faces. They have crow's feet. They're saying they're 14, 15 years old, and Spain is having this rise in crime, um, and it's just bad from what I can see. Right, I watch the news, and the crime is pretty bad. Pickpocketing is really worse than it's ever been. So just be careful, right? But yeah, bringing in $5,000 to sell a stock, hypothetically in the future at like 12 more dollars than where it is now, and getting $5,000 for that right now, that is insane. I think go create some memories with your beautiful family. Go have a great time. Go eat some amazing paella. Eat some delicious food, and let the gamblers pay for it. That it tastes so much better when that happens. Um, Jay Gill says yes for a second. Hang on, Big Bear. It is $5 strikes for 210, 15 contracts. All right, it's all good. Mike Iguizal saying any suggestions on what percent of accounts should be in cash? Or over 40% of my accounts cash, maybe 50%. Zed is saying I like C3.ai. What GME strike would I write if GME hits 25, Zed? 30s. 30s to March, and I bring in a lot of cash. Probably close to $8 a share. $6 to $8 a share. Zed Estate saying snow number one. What is the symbol? Snowflake. I think it's SNOW. Juan Velasquez saying sold $7 Navitas for September 19th. It is $5.59 now. On the side, if I get a sign or roll to January 26th. Well, how much do you get paid for those $7? Right? Like, are you at break even? Are you beating the break even? See what happens. I mean, you don't have to roll for January, man. You can roll out to October. Same strike. Keep it at $7, and then bring in more cash. Or try to go to November, December, bring in more cash. You can keep the same strike. Misty Tree Woodcraft is saying this morning at market open, I bought 100 shares of NMDM and 200 shares of Origin. That's all good. It's all good. I think NMDM is going to make a lot of money. It's just we never know when that's going to happen, right? Let's see here. Have a great day. Y'all says Jude K. One blessings. Thanks, Savage. See you tomorrow. Thanks, Savage. Will Knight also says thanks. Jude K. in the house saying thanks. Roaring Yitty's in the house. What's up, Yitty? You've been we ain't seen you for a minute. I got some $7 covered calls for October on open. I was hoping to get exercise. How does that work? What do you mean? You wrote some $7 cover calls on October on open door, or you bought calls? Does the price have to be close to the strike at the end of the trading day, anytime during the day? So if you sold calls, if it's $7 or 701, 702, those calls are going to get taken away because your calls are less, right? The strike is less than where the stock is. But if the shares are $6.99, $6.98, nobody's going to pay $7 for a stock that is $7.98, $7.99, right? So if on that date it's less than $7, then it doesn't get assigned. If it runs to $7 at some point, I mean, that's the thing about covered calls. Once you write that call, you can get exercised at any time. That's the whole point of the contract, right? You basically wrote a contract saying, this is the strike that I picked. This is the premium I want. And they gave it to you. That's their end of the bargain. Your end of the bargain is you have the shares. Now, you have, from when you sell the cover call or the option, to the date that it ends, and that at any time it can get exercised. So anybody can say, "I paid your premium, I want the shares," and they could exercise. It seldomly happens, but it does happen. Um, so that's how that works. Whoever bought you your cover call can exercise them at any time, but usually happens on Thursday before option expires. It doesn't have to happen Thursday, Mr. Lucky. It happens Wednesdays, Tuesdays. Sometimes, I mean, it just happened to me 2 weeks ago on C3.ai on some cash secure puts. So, like, if it happens on cash secure puts, it can happen on calls. Honestly, it's just it's a crapshoot sometimes. As long as as long as your stock, your calls are under the money, you're safe, but it could get exercised at any time. That's just the reason why the contract is there, right? Whoever Velasquez saying by break even at 620 Savage, you are right. Rowan Yiddy saying sold calls. Okay, so you sold calls, you're good. I mean, get exercise, get the money. Anytime between 9 and October, they can be exercised. It's up to the market. So they can exercise at 10 a.m. or does that have to have closed in the money? What do you mean 10 a.m.? Or does the day have to close in the month? Well, they can anytime from the market opening 6:30 a.m. until like it closes, right? At least the options, which is 1 p.m. So from 6:30 a.m. to 4 p.m. Eastern, um, they can get exercised at any time. It's just that's why you sold the that's why you sold the contract and you picked the strike, you picked the premium, and they gave it to you. That's their end of the bargain, remember. And now at any time they can exercise. But again, it's such a volatile stock, right? That it could be like it could move $1 in $1.50 any day at any hour. So I don't think you're gonna get exercised anytime soon. You have so much time between now and October. Um, so I say wait till October. Wait till like October 1st, 2nd, 3rd, and then let me know. We'll see where you're at. And then if it is close to $7, then a lot more time has shrunk. So those contracts are gonna shrink and be worth less. When then we can think about maybe rolling your cover calls over from October to November and keep them at $7 and bring in another 50 cents. So if you did 10 of them, then you're bringing in another $500. There's nothing wrong with that. And if you want to, go over to $8, move it $1 and get paid $8 for those cover calls, and then move it to January, you can do that too, and you could get paid. So it's all up to you, But it's really hard to tell now because it's so much time between then and now. So I say wait till October. Don't get restless. Don't get nervous. It's just you chose the strike. You chose a date. You're making money. That's what matters. That's all you got to care about. However the fuck it happens, and if it happens at all, what do you care? You got paid. So until then, just cross your arms. Use that money however you see fit, and fucking have a great time. Go buy a 6-pack of beer. Go buy a fucking glass of wine. And drink it and thank the gamblers. It's all good. Moneymaker Juan selling hello all. Mr. Lucky saying Roaring Yeti, they can exercise whenever they want. I've had a one time where my way out of the money called exercise, but it's up to the buyer when they exercise. Absolutely, it's up to the buyer. That's why they bought the contract. They can hit exercise at any point. Okay, I just didn't know if it occurs during a specific time of the day, like after market close. I don't care if they called away or not. Just trying to understand the process. Don't try to understand it, man. It's crazy. It could get exercised at any time. Usually it happens after hours, like at 1 in the morning, 2 in the morning. But it could happen at any time. Just it's all good. It's all good. You're making money. Anyways, I'm out of here, knuckleheads. I'm gonna hit the road because, like I said, I have to go to the doctor with my kid. Thank you so much for watching. 8:30 a.m. back again. Let's see what GME has for us, right? And let's just keep taking advantage of the volatility. Let's keep taking advantage of the volume. Let's keep making money. I know you guys are making cash because I can see it. I love it. I love to see that. I'm trying to make 100 millionaires on this channel. I don't have any commercials, as you guys can see. I can, if I wanted to choose to, so I could get some money from YouTube. But I'd rather just go nonstop so you guys can learn this fucking options process. Roaring Yitty, don't worry about it. You have calls, you have cash cure puts. Just ask away. Don't trip. Don't worry about once you've sold a call. Don't worry about it. It's all good. It's all good. If you have any questions, let us know. We're here to help. Let me know. And you are gonna learn. You're gonna learn. It's just it takes time, right? So right now you're writing cover calls, and there's this little anxiety. I know how it is. You have a little anxiety. You're not worried, of course not. But you're just like, oh, is it gonna get exercise? It's not. You want to see it happen because you want to know what happens, right? You've never done it. You've never gotten exercise, so. Let's see what happens. Find out. Let's find out together, right? So I say give it some time. Wait till October, the first week of October. Yank my chain again, right? And remind me, and let's watch. This trade. Let's watch this trade with Roaring Yitty, guys. $7 calls expiring in October. We're all here to see what happens. You're a technical person. I get it. But sometimes you have to watch the technicals at work, and you can't hurry time, right? So like you gotta give it, you let it process, let the gears grind, right? And watch the gears grind, and if it happens, then great. And if it doesn't, then we'll make you some more money. But guess what? We're making you money. That's what we need to do. We just get paid, 3 calls are going to turn into 4, into 5, into 10, into 20. I can't wait until hear that you wrote some $20, $30 covered calls on open, and then you got like $3, $4, $5,000 on that. I can't wait to read that. I'll tell you that right now. So it's all good, Yitty. It is all good. We're here, to help each other out. We're here to learn. Even I am learning still after years and years of trading. I still learn something every day. I try to learn something every day, and I learn from people from you. Believe it or not, I learn sometimes from novices, and I see things differently. And sometimes I learn from someone that's been trading, a very long time. And it's all good. Just as long as you know that there's always something to learn, and you're okay with that, it's all good. You want a textbook on options expiration? I get it, man. I'm totally okay with it. We'll find out together. You know what I'm saying? We'll find out together, and then we're here. We're here. We're going nowhere. I'm going nowhere. You're going nowhere. Let's keep making you money. Let's keep making you richer. Let's keep making everyone richer. While we learn the process, right? Nobody knows what the market's gonna do. That's the thing. Doesn't matter if you're Warren Buffett or Jimmy Buffett, right? Nobody knows if the motherfucker's gonna go up tomorrow or down or in circles. You got to watch The Wolf of Wall Street, man. There's a scene with Matthew McConaughey that is like legendary, and it's one of the few times, if not the only time, that I've actually seen Leonardo DiCaprio get like outclassed and outperformed, and it's just a sight to see. It's a joy of a scene, and the guy just hits his chest and goes, and they go through like this whole spiel, but they'll talk about what I just said. And look, the point of the stock market is to make money. We're making money, right? And remember, there's always 2 people in a trade, someone making money and someone losing. I want you to make money. I don't want you to be in the losing end. Right now, you're making money. Right now, somebody else is losing money. That's what we care about. In October, let's check back. Let's see that trade, and let's see you make more money. I honestly can tell you that right now you're taking advantage of the volatility. Those $7 strikes could be like $1.50 or something right now. So they're gonna lose like 25 cents a week, 5 cents a day. It looks like. Let's wait next week. Let's wait for that option to lose 50 cents, 75 cents, and then we'll think about rolling it, right? But right now it's September the 8th. Give it a few weeks, Rory. It's all good. I know you're technical. I get it. Let's find out together, dude. I'm going nowhere. So, your boy, the Sav is here, and I'm here to answer questions, So 8:30 a.m. tomorrow, knuckleheads. Be there or be squared. I gotta go. Have a great day. If you see opportunity out there, take advantage of it. Remember, let's keep making bread, man. Let's keep making that bread, and you guys have a great rest of your day. See you guys tomorrow morning. Peace out, knuckleheads. Later.